Hey everyone, welcome back to my channel. Thank you so much for tuning in. And for those who do not know, my name is Ashley, and we are going to be discussing directional bias. Now, I wanted to point out some things. A lot of people ask me, can you trade, be the market maker on crypto, on indices, and you name it, binary? Yes, you may. I trade all those styles, and I use Beat the Market Maker only. I am familiar with ICT concepts, and I do blend those with Beat the Market Maker as well, but that's just really like order blocks and I CBDR range and different stuff like that, but do the swing and stuff. So yeah, I definitely trade Beat the Market Maker, and I traded on all time frames to be exact, like even down to the 1 minute. And like I said, I also traded for binary as well. So let's get started. I decided to do a directional bias videos because a lot of people tend to be confused because they think directional bias is based off of levels, and it's not. Of course, you want to know levels, you want to know what level you are in, you want to be able to count to 3, but directional bias has nothing to do with levels. Okay, so here we are. We have a Bitcoin chart pulled up, and this is actually perfect because it's something similar to what happened yesterday in another pair I was trading. And I wanted to point out some things. So we all know that the market maker cycle for an uptrend is WVVM. And we know the market maker cycle for a downtrend is MAAW. And a lot of people are like, I can't see that. I can't see that. Okay, that's cool. That's fine. No biggie. I'm going to zoom out. So if you notice here, this is a 15-minute chart, right? Let me get out of that. Too much going on. Let me go to a basic one. This is the just a basic H1 chart. I'll start there. Let me go to the 15-minute time frame because that's what a lot of people seem to stick to. All right, so we're on a 15-minute time frame here, and I wanted to point out some things. We are in an uptrend for the most part. We're trending, and I say that because the trend of the EMAs is the 800 on the bottom, the 200 and the 50 on the top, and price on the top. So with that being said, you know that we're in an uptrend. When you see price below the 15 EMA on the 15-minute chart, I'm sorry, not the 15, the 13 EMA, the 5 is below that, you should know that that's a pullback for the most part because we are above the 200 EMA with the 50. So this would be considered a pullback. What you don't want to do is look for reasons to sell in an uptrend, and you don't want to look for reasons to buy in a downtrend, especially when the trend is clear. The EMAs are pointing upward. That means the trend is clearly an uptrend. I'm gonna go to UCAD because I know that's in a downtrend. The EMAs are below the 800 EMA, so the 200 to 800 price is below that. When the 13 and the 5 pull back, you see prices above that 50, but it pulls back. Okay, so what we want to do is look for reasons to sell here. We don't want to buy. And it depends on when we want to buy. If it's a major pullback, by all means get in. That's some, I would take 10 to 30 pips on the pullbacks, but when we're in trend is for the most part, that's when you really want to expect some moving, some movement. People think pairs are going to go to the moon because, oh, it's moving. It's going the wrong way. So it's not going to go to the moon. All right, so let's go back to Bitcoin. What I wanted to point out is, for the most part, we pay attention to the direction of all these EMAs. We aren't paying much attention to this right now because honestly, it's pointing straight up. So we know that's a strong uptrend. We're going to look at these two, right? So in a directional, we're paying attention to this one, and depending on the time frame, the 13 EMA as well. So I'm going to zoom in, and this is today, right? So you never want to trade against the London patterns. And London patterns is the smaller market maker cycle. With that being said, whenever you come to a screen, you always find your anchors first. After you figured out, for the most part, what the direction is overall, you find your anchors. I mark my anchors on every single time frame. And that means I just box off the really large M or the really large W or variation of that. And it's up to you to determine what the anchor looks like in the pairs you like to trade. That can be a head and shoulders. That can be a half a bat spike. That can be a teacup or a U peak, if that's what you want to call it, or an upside down one. That could be the variation of the head and shoulders, which is the 3 drives or the wall of price or a regular head and shoulders, or an M or a W, or an M with the W in the middle and an M and W with the M in the middle. So what I want to point out right now is we are currently in a pullback for the most part. I say that because we do not have multi-day trapping. With trading, you always want to look at your swing points as induced trap shift. And I'm going to use this as an example. Let me zoom out. So here, we are inducing, we're trapping, and we're shifting, right? This is our inducements to the high. This is our trapping activity. This is our shift. All we do is induce trap shift, whether it's the upside or the downside, right? So for me, anchors are multi-day. They're not, you might have some multi-session, but that doesn't really go far for the most part. But anchors are multi-day. So for me, this is just one, this is just the New York session and the London session. So this isn't even really multi-sessional for me. But the problem that I have with this picture is the 50 EMA is pointing downward. Okay. I do not want to get in a trade with the 50 pointing downward. Now, if I do, I'm not planning on taking that to the moon. I'm probably going to take that to the 200 EMA. This is on the M15. I'm going to take that to the 200 EMA. Why? Because this is a pullback. I am not going to get all the pips that I would want to get out of a move in a pullback move unless it's, it's a larger time frame situation, but we're not doing that right now. We're doing a 15. This is a pullback. So for me, I figure this is going to be short term because this 200 is pointing up still, or it's pointing sideways. Okay. So I don't want to trade into EMAs ever. Okay. Unless I have confirmation that it's time for a reversal. So for me, I'm expecting this to possibly go back and take out yesterday's high. There's a possibility it can reach yesterday's low because it's not that far. But if it was like this, no, it's not going to reach yesterday's low. It's going to probably come to 200 and dip, right? So I pay attention to the direction that all my EMAs are pointing to. I don't remove the 5 and the 13 off my chart because obviously you can see, the trapping patterns with those. And what I look for is trapping areas, which is key value and traps to left. That's zone flips. Yesterday's high, yesterday's low, weekly high, weekly low, yearly high, yearly low, monthly high, monthly low. Even previous day, high and low. I look for key figures, which is like quarter points, the 00s, the 50 figures, 000 figures. I look for M's and W's off of the 800, the 3200, the 4800. And I use those as well because when you think about it, the 800 is a 4-hour variation. It's 200 EMA. So basically, if you use the 4800, that's pretty much the whole day, the 24-hour period for a work schedule. So I use the 4800 as well, and it's a key player as much as the 3200. I look for M and W's off of the 200, and I look for M and W's off the 50 EMA. Now, one thing I want to point out is we're in an uptrend, so I don't want to be taking counter trends like that. If I do, it's not to the moon. So here, I have an M off of yesterday's high. That's a valid trade. We're taught that. So the 200 EMA is still pointing up. I'm taking this M off of yesterday's high. I would be expecting trapping and bouncing, one or the other, off this 200 EMA, because why would I expect for this to go to the moon if the 50 is pointing down and the 200 is pointing up, you know? It's most likely going to bounce off of that. So what you can look for in an uptrend is W's off of the yesterday's high. Right here, you see one right below it. You'll also see one right on it. Oftentimes you'll see an M above yesterday's high and a W right below to go through. Oftentimes you'll also see an M off of yesterday's low. You'll see a W to it, thinking like, oh yeah, it's gonna go up. Nope, it'll go up straight into this 50, back down. That's the barrier. Like he said, support and resistance. So this, for example, M off of yesterday's high, straight into a W, trapping off of yesterday's high. And a lot of people hit me up and they're like, Ashley, I don't know what happened. I saw the move, I took the move and boom, and then I got stopped out because you're counter trend trading, bro. It's not going to go that long, you know, 10 to 30 pips, depending on the cycle that you're in. I wouldn't expect those moves to be that big, you know. So with that being said, you know, that's a lot of the problems. Now, for me, when you notice the EMAs are close to each other, they're going to rattle back and forth, you know, to confuse you. But remember, 200 still pointing up. We're still going up. So expect stop hunts, but we're still going up. If you see all the EMAs on top of each other, typically that's a reset, you know, some form of an anchor. And you'll see like the 800, the 200, the 50 are all on each other. And you'll see a lot of, you'll see this, you'll see that, because for the most part, anchors form off the 800. They also form off the 3200 and they also form off the 4800, just depending on the time frame you're looking at. But that's the areas anchors form off of. Anchors do form off 15s, but you know, when you do, I mean, not 15, 50s, when you do with the 50, it's multi-day. And typically anchors look like this to the downside. This is a M, a W with the M in between. Or you'll see like this to the downside. You'll see this to the downside. To the upside, you'll see this, of course. You'll see this, this. I think I just did that one. Variations, but it's just multiple day trapping, and you'll see the blue boxes stacking back and forth. Also pay attention to your blue tracer. That stacks as well. So here's getting higher, 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 higher. And it's not even going anywhere near the low. They're playing off the highs to trick you. So we're going to yesterday high M down and go through, cut through. Because most people think an M off of yesterday high is a valid trade, which it is, but it's just not the move you really want to make, you know? So we're going to look at something on the downtrend side to look both ways. Okay, mouse. All right. Now, once again, with resets, typically, you know, you have resets are just pullbacks, in my opinion. They're the pullbacks within an anchor, the apex and the nadir, or they're the pullback to start a new, you know, reset anchor, or it's just going to change the trend, you know, but they're just pullbacks. So that's the only way that you really should just look at them. Anchors typically form, like I said, off of the 800 EMA, and depending where you are in the cycle, if it's trending, usually the 200, you'll see them form off the 200 EMA, as you do here. It keeps forming off the 200. So 200, 200, it touched the anchor here, the 800, because it was close enough, but the 200. So what you want to do is you want to make sure you're aware of where you are on the downtrend, right? So I don't want to take any W's off the yesterday's low. If I do, I'm just going to take it to the 200 because that's what's in the picture. It's going to reverse, you know. I wouldn't expect that to go to the moon. And then with resets, if you are trading into You're clearly in something which should be a move to the downside. Like basically we have level 3 activity, and we should be getting ready to sell. You would see a lot of play off of yesterday's high. If you see a lot of play off of yesterday's low and you should be in a sell setup, most likely you're going to have a reset upward. If you are in a buy setup and you see a lot of trapping on yesterday's low, then you know you're probably going to most likely be within the cycle. But if you see trapping activity on yesterday's high in a buy setup, you're going to see something continue back to the downside. You know, it's going to reset the other way. So that's a key factor. You would also pay attention to how much ADR, is closed by the end of the day to know if you're resetting and going the other way as well. So those are some things that you should definitely pay attention to. Also be aware if you're inducing trapping and shifting. Most people do not let the trapping phase finish before entering. By all means, you're supposed to get in when it's consolidation and the trapping phase is consolidation, but you want to get in at the end of it, not the beginning. So with that being said, if you are seeing straight, let me find one. Let's see. Let me zoom out. If you were seeing, remember, we look for our anchors. So you notice here, I want one more obvious. Okay, here we are, Bitcoin. This is a multi-day, several days. So this is a very hard time frame. Let's see what it looks like on the weekly. Okay, yeah, that's a W on the weekly. So I'm not trading against that. That's a strong move. A W off a weekly is very strong. I'm not trading against that. So let's go back to the 15. Here, when the 800 is straight, that's typically consolidation, and that means an anchor is forming. When an EMA is straight, period, that means an anchor is forming with for some time frame, So anyway, so we came to the charts, we found our anchor. Consolidation means typically back and forth, and that's where you'll see like your M's or your W's. We have our 50 pointing upward and our 200 pointing upward. So even though I don't understand what's going on because the 800 is between the 50 and the 200, I don't understand what's going on. Just pay attention to the 50 and the 200 for the most part. That was pointing down, that's pointing down. Now we're crossing, pointing up. Okay, we're looking for buys. Now that we're above the 800, we're really looking for buys. And we're just, this is going strong. So any chance to get in, I want to find a reason to get in. A W off of yesterday's low, a W off of 200, or even a 50 off of yesterday's high. I want a W off of some type of trap zone. I'm looking for W's. So when you understand what you're doing in the cycle, yeah, take those M's, take that small pullback, take it. But I'm looking for W's. That's the real move. I want the W's. And of course, you do have the market maker cycles play out, those London patterns and whatnot, but most people get confused here because they're like, well, the 15, the 3050, 1350 cross, then the 250 cross and the 850 cross. No, I haven't seen no more crosses. After the cross happened, you get to use them anymore, baby. They're done. Okay, those are done. But you should be paying attention to reasons to look for buys in an uptrend and reasons to look for sales in a downtrend. Do not get confused because you see something off of a high or off of that. And if the EMAs are next to each other, best believe they're going to trade into each other and bounce. They're going to trap and bounce. So, for the most part, always pay attention to what those EMAs are doing. Are they pointing upward? Are they pointing downward? Are they pointing sideways? If they're sideways, that's consolidation. So once again, if this 50 is pointing down into an EMA that's pointing up, which is the 200, that's just temporary. I don't know if I really want to take that. And so, for example, you see here a reset. The EMAs are on top of each other. The 200 and the 50 are on top of each other. A reset. A W off the 800, boom, it moves. So that's how you can tell oftentimes that you're in a reset as well. You know, I see this W off of yesterday's low as well. That's a good sign as well. You know, you'll see that as well. For that's the reset to the correct direction. So that's just within trend. Um if this was something that was supposed to be going to the downside, you saw a W there, that means it's going to have to continue upward, but this is in the correct direction, so that's why. So here we go once again. EMAs on top of each other, big move. You know, just pay attention to those little things. Like I said, they'll help you not be as confused. Even with the higher time frame, you want to pay attention to everything as well. And I tell people, pay attention to the pairs pullback. Does it pull back to the 50 for a deep retracement? Does it pull back to the 200 or the 800? You know, on the 15-minute chart or the H1. Does it pull back to just the 15, the 13 EMA and makes its move? You know, you want to pay attention to those things. What are these doing? This is not long term. The 13 and the 5 is not long term. But if we go to the hourly, for example, here we have this 200 pointed up, this 50 pointed up, but the 13 and the 5 is crossed, you know. So that means for the day we have a pullback for the most part. I wouldn't really expect this to be a move towards the downside, because I need to see more trapping activity off of this high here. I wouldn't be so confident that this is going to go to the moon. I would just expect it to hit the 50 at most and start to do its thing again, because once again, the 50 EMA is pointing up. Now, if the 50 was pointing down and the 200 was pointing down, then that's a different story. You know, we're probably in a trend directional change, but for the most part, I wouldn't be doing that. So even for, see, look at here. This is a very, very large W, is GBP USD. It's also a reset to the upside, trend change and everything. You know, that's a new anchor. Remember, resets are just pullbacks. So here we are making our move back up again. We're making our move back up again. You know, when you see a lot of this type of behavior going on, where we know we're in a downtrend and all the EMAs are playing with each other, like, I don't know what's going on, I don't know what's going on. Oh, baby, that's a reset anchor. Trust me, it's gonna be a move. It's no visible stop hunts, really. You know, barely. So, you know, with that being said, just pay attention to the type of trades you're looking for. If you're in level 3 or peak formation, you're looking for anchor trades. You're looking for you know, 12s, 22s, 21s, 33s, head and shoulders. You're looking for U peaks or upside down U peaks, teacups as they're called. You're looking for spikes, which is the half of Batman's. That's what you're looking for. If you're in level 1, you're looking for AFP trades. If you're in level 2, you're looking for safety trades. You know, these trades are not for each level, they're for specific levels, you know, so it should make it a little bit easier so you're not confused on what you're looking for. You know, you're looking for, you know, you'll see anchor trades or small anchor trades in the AR ranges, which are London patterns 1, 2, and 3, and 4 off of the AR 00, AR 50 lines. Like, you'll see those. That's what you'll notice. When you start to see larger structures, chances are you're most likely in level 3. So that's a lot of range trading, and in range trading is basically just support and resistance. Let's see, you would trade that like that, and you'll pretty much take that down to the 50, take it back up just to that high, and then get out and take it back down. Because remember, the move to the downside is not to the upside, so don't ever think it is. Pay attention to the direction that's being trapped. They're not going past that high. They're coming back down. They're not going past that high. And then, of course, is the big M with the little W in between. Don't ignore that big M because you see this little W. That's a rookie mistake, you know? And then, of course, the 800 is still giving direction down. So why would you be thinking this is going up? The 800 is pointing down. It's not pointing this way. It's not pointing this way. It's pointing down. So all this was is a pullback or an anchor reset or a peak formation reset to the downside, you know. And now you see the difference. The 800 starting to flatten upward. It's not just straight down. It's moving upward. And then I'll get rid of that. Key key indication here this W moves up. This is flat now. Okay, we might have something going on. This is flat. This is going up. This is cross. This is going up. You know, that's what you want to look for. I'll definitely show you guys how to count levels, the different ways to count levels in the next video. It just won't be this one. It's just based off directional bias of what not to do. The 800 is kind of far, so you can take that in, you know, up. It's far. Now, if the 800 was here, I would expect this down like it did here. The 800 is much closer down. So you got to think about these things. You got to think about the EMAs you're trading into. You got to think about all the trap zones you're trading into. Now, as a Btmm market maker trader, I can tell you now, this is not my template I use. I can trade with just straight price action. We're going to get out of this. Eventually, with homework, you'll be able to trade and count to 3 and realize what's going on without even needing all of this. You know, you won't need it. This is, in my opinion, something that'll come with your eyes being trained. But look at this. This is a big M, basically. If not, we don't even have to look at that, but there's a peak formation right here. Okay, so we came out 1, 2, 3, pull back 1. There's consolidation. That's a 1, 2, 3, pull back 1. Well, this is part of the same thing. 1, 2, 3. This is level 3 actually, so it's a deeper. You can say that's even 4, deeper and pulled up. So within time, you'll be able to see all this without, like, people think, oh, Beat the Market Makers, just EMAs and indicators. No, that stuff is all there to help you. And trust me, I keep the EMAs on my chart. I keep the highs and lows. I keep, you know, certain things. I don't keep much, but I keep those. I keep the ADR marker. Certain things that, you know, would just make my job easier, because I don't really care to be, oh, I trade just strictly price action. I can trade that too, but I trade with the things that I have because it makes my job easier for me. And nothing's telling me when to get in and when to get out. You know, for the most part, it's just there's just more confluences, which is better for me. I've had some very, 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 very nice payout days with this strategy, using every type of pair, you know, currency pairs, crypto indices, and I mean very nice payouts. And what I did is I took the time and I learned the skill because I knew the money will come. I learned the skill, the money would come. So with that being said, you know, don't doubt yourself. It'll be very hard. Don't doubt yourself, but put in the work, continue to study, continue to put in the time and effort. Definitely don't stick to your bias. They change, but don't switch up your bias because someone else tells you to. Like, I can't tell you how many times I hear people say, I was in that, or I had this and that, and it didn't, it ended up doing what I thought it was going to do, or I got out because of this person. Stick to your bias. You know what I'm saying? Always try to project where you think, you know, if it does this, it's going to, you know, basically, you want to have 2 to 3 projections. You know, if price comes up to yesterday's high, I'm going to expect this for one, or if price comes to yesterday's high, I might expect that, or, you know, maybe this, that. You have to think of those type of things. If the market maker does this, then I do that. That's your attitude. It's never, oh, well, this is level 3, so it's going to do this and this. And oh, I wanted to point that out too. The market maker cycles doesn't look like this. You know, you will see a lot of this. That's a V. It's a variation. Like, you will see a lot of that stuff. Don't get so stuck on textbook, or, oh, it's supposed to look like this, you know, and then go into AAW. No, don't think like that, because that's not how it works, you know. And if I'm on, let me get out of this. If I'm in this pair now, and I'm thinking this is my anchor, I want to see the 800 EMA within this anchor at some point. If this was the high time frame move, I want to see this baby in the picture like I see it in this picture, you know, like I see it here. I want to see the 800, you know. Because remember, 800s are where the anchors are formed. So yeah, I'm hoping this can help you guys out a bit. Just stop taking these trades right here. Don't take this 50 trading into the 200 EMA. And you can, sorry about that. You can, just don't expect it to go to the moon. Expect it to trap and move. So you see here, we have inducement, trapping, we have inducement, we have trapping, we have shifting, we have inducement, we have trapping, we have shifting, we have inducement, we have trapping and shifting, we have inducement, we have trapping and shifting. That's how I want you guys to think, just think like that. What I don't know what I'm doing. No, think like that. If the 800 is in the picture, it's going to cut through it. Okay, it's going to cut through. It's moving. Okay, even that's multi-day. It's going to move through. So don't worry. Sometimes pretend like the 800 is not even there and just pay attention to what the 50 and the 200 is doing. A lot of times that's what you want to pay attention to anyway. But like I said, we will be having some new videos out for you guys soon to help you some tips. Remember, I am not an educator. I'm not teaching a course. You can definitely continue to seek out mentorship with who you're seeking it out with. So when people come to my channel like, that's not how you trade, dude, I know how to trade this method. That's why you're watching my video. I'm not here to teach the course. I'm just making your life a little easier, helping you see what you already see. Well, once again, thank you so much for tuning into my channel. Please share it. Don't forget to like, don't forget to subscribe, but make sure you share it. Help somebody. Pay it forward. Help somebody. You all have a friend who trade this method. Help them make some money. Help them catch some pips. Thank you so much. Don't forget to follow my Instagram as well. And you guys, happy trading.